Hey everyone, welcome back to the Noob Selling Options community. Today, we are jumping straight into an explainer where we completely bypass the market hype, ignore the screaming headlines, and uncover the actual math driving AMD's valuation right now. If you're looking for strategic options trading opportunities, you know we've got to understand the numbers underneath all that noise. We're going to peel the onion on AMD's blockbuster Q1 2026 earnings to find out exactly what this stock is worth today, and honestly, more importantly, where it's going over the next 3 years.
Okay, let's dive right into our roadmap. We're going to cover 4 things. First, AMD's earnings and those crazy upgrades. Second, we'll ground our valuation using the PEG ratio. Third, we'll project a 2029 price target. And finally, we'll track the path to $1 trillion market cap.
So, Section 1, AMD earnings and upgrades. Let's peel back the hype because, wow, it has been absolutely impossible to ignore the massive post-earnings euphoria sweeping Wall Street this week. Let's figure out what actually triggered it.
Okay, AMD absolutely crushed expectations. Earnings per share, they came in at $1.37 against a consensus of $1.29. Revenue topped $10.25 billion, but that data center revenue, that is the real game changer here. It surged 57% year over year, hitting $5.8 billion. That massive jump is heavily tied to the skyrocketing demand for CPUs handling agentic AI workloads. You know, AI that doesn't just answer your questions, but actually takes independent action. And the crazy thing, management isn't seeing a slowdown anytime soon. They pushed Q2 guidance to a massive $11.2 billion, which just handily beat analyst predictions.
Because of these numbers, the broader market sentiment has shifted almost overnight. The narrative went from AMD just being an alternative to competitors to recognizing them as a primary architect of global AI infrastructure. And this shift didn't happen in a vacuum. It's heavily driven by the unveiling of their fully integrated rack-scale systems, Project Helios, combined with the ZT Systems acquisition. Basically, they're now delivering fully integrated server cabinets straight to the hyperscalers, those massive cloud providers like Microsoft and Google. It's the whole shebang.
Naturally, with a paradigm shift like that, Wall Street analysts scrambled to revise their targets upward. Baird raised their target to a street-high $625, noting that the CPU addressable market could literally hit $120 billion by 2030. KeyBank, Barclays, and TD Cowen all pushed their targets to $500 or more. The consensus average target right now? It sits at roughly $437. There are like 40 analysts recommending a buy or strong buy at the moment. It's wild.
Moving on to Section 2, grounding valuation with PEG. Stripping back to cold, hard math. Because as options traders, we know perfectly well that post-earnings euphoria can really distort valuations. We've got to be the voice of reason and establish a safe, conservative base case.
So to cut through all that hype, we need an anchor. And for us, that anchor is the PEG ratio. The price-to-earnings to growth ratio helps us determine the relative trade-off between the stock's price, the earnings it generates, and its expected future growth. This is exactly how we keep our feet on the ground.
To build our base case for May 2026, we're going to follow 2 simple steps. Step 1, we take the current Wall Street consensus forward PE, which is roughly 50x. With a share price hovering around $408, this implies a forward 12-month EPS of about $8.16. Step 2, well, this is where we build our safety cushion. Management is actually projecting greater than 80% growth for the data center segment. But actually, scratch that. We're not going to use a number that high. Instead, we're going to balance that hypergrowth against the slower, cyclical realities of their client, gaming, and embedded segments. So we're applying a super conservative blended EPS growth rate of just 25% for the entire company.
When we take that 50x forward PE and divide it by our conservative 25% growth rate, we land at our current base case PEG ratio, which is exactly 2.0.
Now, what does a 2.0 PEG actually mean for us today? First off, the premium is definitely real. Standard textbook value plays are looking for a PEG under 1.0, so yes, you are undeniably paying a premium for AMD's future earnings. Second, it's actually highly reasonable for this specific sector. Remember, AMD is a mega-cap tech company anchoring a massive structural global shift. But third, and absolutely most importantly for our strategy, we have a built-in cushion. Since we only used a 25% growth rate, any upside surprises like better gross margins or faster Helios deployments will instantly compress this ratio. So no, it's not a bargain bin price, but the underlying math absolutely holds up without us needing to rely on a speculative bubble.
All right, Section 3, the 2029 price target, projecting the base case future. We're going to project 3 years into the future to establish a solid, mathematically grounded ceiling. This is absolutely critical for our long-term option strike selection.
We have to stop and ask ourselves, where does this stock trade if the market multiple compresses as the company matures? Because let's be real, as hypergrowth companies settle into their dominance, the broader market is rarely willing to keep paying a 50x multiple forever.
So here is how we build our 2029 target. We're going to shrink our PEG ratio from 2.0 down to a much more conservative 1.5. Step 1, we multiply our target 1.5 PEG by that steady 25% growth rate. That gives us a target PE of 37.5x. That's a huge valuation haircut from today's 50x multiple. Step 2, we project our earnings. We take today's $8.16 EPS and compound it by 25% over 3 years. By May 2029, AMD should be earning roughly $15.94 per share. Step 3, we just multiply that $15.94 EPS by our new, lower 37.5x multiple. That lands us at a perfectly mathematically sound share price target of $598.
And this brilliantly illustrates the sheer power of compounding earnings. Even taking that massive valuation haircut, literally dropping the PEG to 1.5 and the PE multiple down to 37.5x, the stock still marches from roughly $408 to $598. That is a 46.5% total upside and a 13.6% compound annual growth rate that completely survives a contraction in market hype.
Which brings us to Section 4, approaching $1 trillion. The structural foundation. Because we need to know, what does a $598 share price actually mean for the sheer size of this company in 3 years?
Well, as of May 2026, AMD has approximately 1.63 billion shares outstanding. If we multiply those 1.63 billion shares by our target price of $598, we get a projected market cap of just under $975 billion. That means AMD will literally be knocking on the door of the exclusive $1 trillion club.
For the noob selling options community, the strategic implications here are just huge. First off, a near $1 trillion valuation means the AI fortress is secured. They are a dominant global infrastructure provider now, not just a plucky challenger. Second, this creates a massive compounding pillar for the long term. Third, and honestly most crucially for us, is premium generation. At a $975 billion market cap with a $600 share price, the liquidity in the options chain is going to be staggering. Executing the wheel strategy, systematically selling cash-secured puts and covered calls, is going to offer absolutely incredible premium harvesting opportunities with beautifully tight bid-ask spreads. Finally, just keep an eye on the dilution caveat. If AMD decides to initiate share buybacks with their massive cash flow, the share count drops, which means the stock could hit our $598 target at an even lower total market cap.
Ultimately, AMD's grounded math proves that steady, compounding execution doesn't need a speculative bubble to approach $1 trillion. If you found this breakdown helpful for mapping out your option strikes, please go ahead and hit that like button and make sure you subscribe. We are all about bypassing the hype here at Noob Selling Options to find the real, actionable numbers for our trades. But I'm going to leave you with this one thought. If a highly conservative, grounded model easily pushes AMD to $1 trillion, what on earth happens if they actually beat these expectations? Think about it. I'll see you in the next explainer.